So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So today we're going to talk about GE. I put it on my watch list and I'm here to do my best to explain why I think a GE stock would be an opportunity for each of us. And in this video we're gonna do a pretty solid cost breakdown, and also I present my research about this stock and the stock analysis, and we go over all the 6 KPIs that you can see here below. So the EV divided by the sales actual, the gross margin of GE company, the rule of 40, the sales growth, and the debit ratio, and finally last but not least the PEG, the price earnings ratio divided by the profit growth. And stick around for this entire video, because I think there could be a massive opportunity in this stock GE, and you can multiply your money by 3 from my point of view. Finally, I will also give you a fair price indication of GE according to the profit growth estimation for 2021, and also the average of the last 4 years of the profit growth development. So let's get started. So first, the enterprise value divided by the sales actual. So this ratio is a measure of the value of a company regardless of its financing, and it can give us an important indication for the valuation of a fast-growing but still loss-making technology company. In terms of GE, we have an enterprise value divided by the revenue within Finance Yahoo of 0.89. I calculated 1.5 as the market capitalization minus the cash plus the debit is around about 126 billion divided by 84 billion revenue, and we end up at 1.5. It's less than 8, and so therefore we receive 3 points for GE, the first 3 points, so quite nice. Second one is the gross margin trailing 12 months. So we take the sales, reduce it by the direct cost, and divided it by the sales. We end up at 23%, and this gross margin provides a good indication for the profitability of a business model, and the higher the percentage, the more money company has available for sales, marketing, and other stuff. So unfortunately 0 points. So next one is the rule of 40 score trailing 12 months. We take the sales growth rate trailing 12 months plus the free cash flow margin of GE, and we end up at minus 22. This is a simple key figure to assessing the efficiency of a company growth and the quality of its business model, and the higher the value, the better the company or the business model of a company is. And we have unfortunately in minus 22%, far below 40, 0 points for General Electrics. Next one is the sales growth trailing 12 months minus 25%. As we are far below 20, unfortunately also 0 points. Here a screenshot from Yahoo Finance as well. So here the development of revenue within the last 4 years. So we see a decrease of revenue from 2016, where we had a positive earning, so profit, and then in 2017-18 a strong decrease in terms of earning, and from 2018 quite a nice development, and it looks like that we can have the break even here on 0 maybe this fiscal year, and that is why I think it could be a nice opportunity to get into the General Electric stock. So the debit ratio, the debit last quarter divided by the equity last quarter. So we have 2.34, unfortunately, and this is the debit ratio less than 1 indicates a low debit, while a debit greater than 2 indicates a possible risk for debit. So that is why we didn't receive any points, and we see quite a risk in terms of the debit for GE. So it's really depending on the overall result within this fiscal year, and also the expectation for the next fiscal year. So if General Electrics provide us good earnings and good earning report, then it could be, as I mentioned before, a nice point to enter in this stock. Last but not least, PEG. I love this KPI. This is one of the most important key figure for the assessment of an already profitable growth stock, and it calculates the ratio of the PE and the profit growth, and a ratio between 0 and 1 is indicated as an undervaluation, and under these circumstances we have 0.35. So this indicates that PG that GE is undervalued currently. And here we can see also the Q3 figures. They beat the market and the expectation of the earning results, and in Q4 this will be also quite an interesting date if they beat the expectation. Then from my point of view they will have further pump in terms of the prices of the stock price. So here 3 points, overall 6 points out of 18. So GE is not really in high growth stock currently in terms of the overall evaluation and analysis. So but if we take a look into the profit growth estimation for 2022, so the current expectation is 0.05 for 2020, and for 2021 release of 0.36. So then we would talk about profit growth for the next fiscal years of 720%. So that's huge. But what I did is I used all the EPS results from the last 4 years. So EPS is 17, 18, 19, 20, 21, and we came from minus 1.04, then in the EPS in fiscal year 18 minus 2.62, and then for the last fiscal year around about 0. And as I mentioned before, the expectation for this fiscal year is that we have to break even and we come back into a positive profit area, and also a very nice development for the next fiscal year. So as an average 34% for for GE, and to answer the question of the fair value of the stock by Peter Lunch's formula, EPS multiplied by the profit growth, I take the EPS, the expected for 2021, 0.36 multiplied by the average of the profit growth within the last 4 years of 34%, and we came up at 12.24, so around about $12 for GE, for the GE company, as a fair price. So an opportunity of around about 30%. In addition to that, I also use, let's say, a scenario that they will present it better EPSs for the next fiscal year. So if they would have a better performance than estimated, so I double it to 0.72. That would means that we have an average of 42% profit growth within the last 4 years. Then we would end up at $30. So what I would like to show you here is just that the level of an higher EPS than expected would be huge. So if they would present it something up to $1 for 2021, there could be a really high pump in terms of the GE price. And we have the opportunity to multiply our money by 3. And here also a screenshot about the forecast of the price, so between $9 and $11 currently. And as you saw before, the fair value in terms of the average of profit growth within the last 4 years, we have around about $12. But nevertheless, I see also quite a nice opportunity if they presented us better EPS result than 0.36. Everything above 0.7 would mean a huge pump in terms of prices, or could be. Yeah, so I hope you liked the video. Please feel free also to hit the subscribe button below, become part of the Monkey Stock Club family. That helps me to increase the community here. Hopefully we will see each other again. Bye.